Hi, everyone. My name is Catherine Ring, and I am the VP of Marketing here at ZSuite Tech. We have some great content for you today on the art of the possible, becoming the go-to institution for 1031 exchanges. So really, what are 1031s and how do we sell to them? We have today joining us Nathan Baumeister, our CEO and co-founder, and Jill Feiler, our Chief Client Officer. We're very excited to be here with you today. As Nathan has indicated here, we have a great agenda in front of us. We're going to talk about how to sell to QIs or qualified intermediaries for 30 minutes. We'll have some time for questions and then close up with a demo about 40 minutes in. So we'll try and get you guys out of here a few minutes early today. If you have any technical difficulties, please feel free to chat in. I will be answering questions there. This platform works best on Google Chrome, Firefox, and Safari. So if you're using another browser, that might be a first thing to try. But other than that, we should have smooth sailing all the way through. So I'm going to disappear from the screen, and Nathan and Jill are going to take it away. Thanks, guys.
All right, thanks, Catherine, for the introduction. And without further ado, let's go ahead and get started. So the first thing that we wanted to talk about is kind of what is a 1031 exchange and what is a qualified intermediary? Because just as a baseline, we've found that some bankers are very familiar with this process and some are just kind of on the outside of it. So to first start with the 1031 exchange, originally it was called a like-kind exchange. And there was a section in the Internal Revenue Code called Section 1031, hence the nickname 1031 exchanges. When it first happened, it was for any like-kind exchange. So if you had a building, you could use the 1031 exchange to get another building. If you had an airplane, you could use it to get another airplane. You actually used to be able to do cars and different types of vehicles, plots of lands, and all those types of things. However, they did make a change in 2017 where it now can only be used for what they refer to as real property. So typically now you only see it with buildings. What it allows you to do is it allows you to defer the payments of a sale of a property as long as you use the proceeds from the sale of the property to buy a like-kind exchange or another property. The exchanger, so this is the person that is actually buying and selling the properties, must report the 1031 via Form 8824 with their federal tax return, and it requires an accommodation by a qualified intermediary, and then of course a bank as well where the funds actually sit. So it's a pretty cool tax advantage for folks that go in and out of selling different types of properties. But it does create, there's multiple players. So again, you have the exchanger, that's the person buying and selling the property, who's looking to take on that tax advantage of deferring the tax of the sale of that property. You have the qualified intermediary. Sometimes they're also referred to as accommodators. And then you have the bank, which is you all. So I want to talk a little bit more about these qualified intermediaries, or as I mentioned before, sometimes they're referred to as accommodators. They are, certified individuals that basically act as an impartial bridge between the sale of the initial property and the acquisition of the replacement property. So they prepare, review all the necessary documents. They receive the funds and disperse the funds using a qualified escrow account at a particular financial institution. You will find that just as you do with a lot of other businesses, there are all different types of and sizes of qualified intermediaries. So on the small side, what you'll typically run into is these are going to be individuals who kind of run their own practice already. Oftentimes they are associated with something within the real estate market. So you'll see realtors who have the availability to act as a qualified intermediary. You have attorneys and law firms that have the ability to act as qualified intermediaries as well, CPAs, wealth advisors, those types of things. When you get to the medium size, you start to now see some firms that do nothing but be a qualified intermediary doing 1031 exchanges. And then you'll also see banks with qualified intermediary departments. And so that's an important distinction to understand when you start thinking about wanting to grow your deposits or non-interest income or whatever it might be in the qualified intermediary and 1031 space. Are you going to look to bank qualified intermediaries, or are you going to look to build out your own practice at the bank? It does, there are certain rules that you have to follow that you do have a qualified intermediary. Typically, banks will have a different entity, if you will, to do those things. But that is, there's two different go-to markets for banks. When you get to the large side, oftentimes you're going to see that it's going to be a lot of title companies that own these QI firms. And again, you still have these independent QI firms. The largest qualified intermediary firms in the United States are Asset Preservation, which is owned by Stewart Title, and IPX, which is owned by Fidelity Title. But as I mentioned, you do have people doing this across the board, from one person shops to 10 people shops to much larger than that. So with that, I'm going to hand it over to Jill to talk a little bit why QIs make great clients.
Awesome. Thanks, Nathan. So why do QIs make good clients? So obviously the biggest thing is they're driving large core deposits into your bank. So although 1031s can be as small as a single rental home being traded for another rental home, there's really effectively no limit on how large these deposits can get. So in preparation for this webinar, we spoke with a large number of QIs out there to really understand what it is that they're driving into the bank. So one we spoke to out in actually Colorado, and we'll talk a little bit about him a little bit later as well. But just to give you an idea, he handled a transaction in Aspen, Colorado, where the city transfer tax alone was $995,000. That same QI helped Toyota move their headquarters from California to Texas. So you can just imagine the size of that transaction. And since we're talking about, rather large deposits in the 1031 space, I think we'd be remiss if we didn't at least touch on the recent events in the banking industry of late. Everyone on this call is acutely aware of what has happened with SVB and Signature Bank. And therefore, of course, the importance of diverse, stable deposit mix within your institutions. And these types of deposits can really lend to that stability that bankers are currently seeking. In addition to that, I am pretty certain that each of you have fielded a large number of FDIC insurance calls over the course of the last couple of weeks. I know we have as well. And so I'm sure that you've received many more than we have here. But the good news is that each exchange, of course, is FDIC insured up to that limit based on the fiduciary nature of the deposit account. So how they're titled is really important, because each exchange at the QI is going to be separately FDIC insured. Of course, some of those exchanges are above the FDIC insurance limit, so you'll definitely need to be prepared to have those conversations with QIs and prospects that are looking to deposit these deposits within your institution. So not only do these deposits drive those well-needed core deposits into your bank, there's also a fair amount of fee income that is generated in the form of wire transfers. So QIs have a very strong need for wire transfers, oftentimes doing many throughout the day that is going to generate some fee income. But not only that, there's potential for fee income just with the account volume itself with these QIs. And of course, that's going to lead to other things. Establishing that relationship and growing that relationship within your bank is going to lead to additional commercial lending, whether that's in the form of real estate lending or something else. But in addition to that, it's going to give you that access to high net worth clientele that those QIs generally have as their clients. So a lot of opportunity for the banking industry as a whole as you're diving into this market and this vertical. So with that, I'll turn it over to Nathan.
All right. So let's spend a little bit of time getting to know him and just go deeper into some of the details. So from a landscape perspective, and I'm going to spend a little bit of time on the different compliance requirements of what is going on within the this particular space. So 1031 exchanges are a federal statute that has to do with the IRS, and it is through the Internal Revenue Services that where they write the rules. However, in general, the federal regulators have actually not spent a lot of time diving into this particular space. The big exception is, of course, that difference or that change that they made in 2017, where it could be any like kind exchanges, like I said, an airplane to an airplane. I know when I purchased my airplane, I definitely wanted to do a like kind exchange, but I'm just kidding. I don't have an airplane. But so they did make a change in 2017. But in general, they stay away from it. It is also important to note that some political parties or politicians do refer to the 1031 exchange as a tax loophole, depending on the particular political cycle and where we're at. You know, some parties are more for it or more against it or whatnot. So up to this point, there's been very little to no challenges in changing out the 1031 exchanges. However, it is important to understand that it is viewed from some as a tax loophole. Now, where it gets interesting is when you move to the state level. So, you know, for those of you that are only working in a particular state, or you have, you know, locations just in one state, obviously just understanding what are the tax implications for these types of 1031 exchanges at the state level will be important. Those of you that are multiple states, obviously, you have to worry about the rules from state to state. And it is up to the states. You know, some have capital gain taxes, some don't at the state level. Understanding what the rules are, how it might affect the 1031 exchanges is something to look into and at least just understand. More than anything else, it seems like California is the most interested in trying to figure out how it is that they can make sure that they get their capital gains taxes from 1031s. And because of that, they have actually dove into deeper scrutiny than many other states. Another one of them that's interesting, I don't think we have anyone on the line that is doing business in Idaho, but Idaho has put on a specific requirement that to do a 1031 exchange in that state, the deposits have to be held at an institution that has a location, an operating location within that state. So just interesting as you look at the breakdown of where the United States falls in with both the federal level as well as the state level. A couple things to keep in mind, especially, I mean, the qualified intermediaries know this, but it's important for you to know it as you're talking with them. There's definitely a lot of frowning upon commingling 1031 deposits. It is a best practice to keep them in separate escrow accounts. Jill touched on one of the big reasons for that is, of course, if you have it set up appropriately entitled as an escrow account, then each individual exchange account does get the FDIC insurance up to the $250,000 limit. However, there's a lot of other reasons why it's frowned upon to actually just throw in all the deposits just in one big account. So the other thing from a compliant perspective that's good to understand is within a 1031, there are specific time windows or time that they have to follow in order to be able to get the tax benefit of a 1031. So your qualified intermediaries that you're looking to bank, or if you're looking to become a qualified intermediary, you know, one of the biggest things that everyone is worried about, that both the exchanger as well as the qualified intermediary, is to make sure that they can complete the transaction within the time period set forth within that. As far as what are the things that qualified intermediaries are concerned about on a day-to-day basis, wire fraud is a big one. You all are probably familiar with that as well. That's in pretty much all real estate transactions, legal transactions, et cetera. There's a lot of things to be concerned about that, but this is something that you all are familiar with and know how to be able to handle and work through. The other one is going to be on the liability side, just the concern, what if anything happens to the qualified intermediary or the bank that are holding those deposits. And then I mentioned, completing the transaction before the deadline. It's always going to be a top of mind concern that any qualified intermediary is going to have. If they can't do it within a certain time period, if they set up a 1031 exchange and then for some reason they can't do it, it's called a failed 1031. And of course, the qualified intermediary nor the exchanger wants that to be able to happen. The last piece that is a big top of mind concern for these qualified intermediaries is they do want to make sure that they can provide great customer service and get everything that they can to clients. It is a service-based business. It's one that they have to build relationships with over time. Oftentimes, someone that does one exchange, the likelihood that they're going to do another exchange in the future is extremely high. So qualified intermediary is looking to build out that relationship for people to come back time and time again. So let's transition over into what is it that a qualified intermediary looks for in a banking partner.
Awesome. Thanks, Nathan. So as we talked about earlier, we did a lot of research when looking at providing this information today. We talked to a lot of qualified intermediaries out there, and one in particular is Dan McCabe. He is the co-founder of Exchange Resource LLC. He co-founded the business in 1977, and he has also served as the president of the Federal of Exchange Accommodators, which is really important. Many top executives in the QI space either has worked with him or worked for him. And in fact, he testified before Congress advocating for very sensible QI governance. So we were really fortunate to be able to have that discussion with Dan and understand really from his perspective what he's looking for when looking for a primary financial institution. Some of the items that he shared with us specifically was he does like to have a branch close to where he is, but he also doesn't want to deal with just one bank. He also feels very strongly about diversification. And so he works with a number of different banks, one locally, and then has funds at a couple of other banks that offer that nationwide access, offer national and international wire transferability. And that secure wire transfer is really, really important to him. He mentioned that a lot when we were having those discussions. And so Dan's feedback was super important to us along with others. So let's really get into and talk specifically about generally what everyone is looking for in this space when searching for a bank. So the first thing is going to be that compliant account structure. And so in terms of having a qualified escrow account, they really need a bank in order to facilitate that. So pre-2008, the regulation out there was that there really wasn't much of regulation out there in this space. And so what some of the QIs were doing is investing those funds into the stock market, potentially taking some short positions. And as you can imagine, what happened when we hit 2008, those funds were at risk, and some of them experienced losses for their exchange clients. So the rule was changed in 2008. And so the short version is that it always hasn't been that they need that compliant account structure with the bank. But today, that is definitely the case. And so what we do know is that they're looking for repeatable, highly secure wire transfers. It's often dozens and dozens per day that they're working with. In addition to that, cutoff times are important in the wire transfer space. They get very anxious when wires go out, and they want to make sure that those monies are transferred ASAP. The other thing that we found out is that digital tools really matter. So can you offer the digital tools for these QIs to reduce their paperwork, reduce the likelihood that they're going to cause an error or mistake because they've got some manual internal processes? So we did, having those conversations, understand that the digital tools matter to this space. So the right technology within your bank can definitely be a differentiator for you as you're going out and seeking out 1031s as prospects. So moving on, there's a lot of particulars that we need to understand, right? It's not that you have to have extensive product knowledge, but you do need to be able to have these conversations as you're looking at QIs and bringing and seeking out that vertical within your bank. And there's a lot of things to understand. You don't have to have, again, that level of expertise, but it's nice to really understand and be able to talk the talk, like I said. So take the time to really educate yourself. A couple of items up here that just to give you an idea. We're talking about, your classic 1031 exchange that is out there that Nathan described earlier in the presentation. However, there are what we call reverse exchanges out there, which does allow the taxpayer to purchase new property before selling the old property. So kind of similar to in the mortgage world. There's reverse improvement exchanges, which allows the taxpayer, the owner of the funds, to make improvements using those exchange funds. And then, of course, reverse construction exchanges, which, as you can imagine, allows the taxpayer to build new construction using those exchange funds. So the key here is just to make sure that you have product knowledge, you're educating yourself before you're having these conversations. And then finally, what is the biggest thing that QIs are looking for? Obviously, they have to have that account structure. They need the ability to wire funds, cutoff matters. We already talked about that, and those digital tools are really important to them. But one of the biggest things that they're looking for today is definitely favorable pricing. If you think about how QIs are structured, they are charging fees for their exchanges that are coming in for their clients, or they are splitting those rates that you're providing them in the form of interest with their clients as well. So they're having those negotiation moments with their clients. They are either their fees are either calculated as a percentage of the deposits that they're bringing in, but then, like I mentioned, they could be splitting that rate. So say you're offering a 3% rate on those deposits. Potentially, if Nathan is one of my clients and I'm the QI, Nathan may be a really good negotiator, and he's going to negotiate half of that. And so you're going to need to have the ability to pay Nathan 1.5% as well as myself as the QI 1.5%. I may have another client that comes in that's not as great of a negotiator, and I'm only giving that client 1%. And so having the ability to be able to handle those complex interest configurations is going to be important. In addition to that, sometimes the interest rate is converted to an earnings credit, which you all are intimately familiar with. So do you have the capability to handle those complexities that go along with each one of these exchanges, which could be completely different from an account structure perspective? And as a final note, what we've seen and what we've felt out in the industry, and as we're working with those QIs as well, obviously, as the Fed fund rates continue to climb, there is definitely, we're seeing and feeling that increased pressure for those exchangers out there. And they're wanting to get a bigger piece of that pie. So they're being more aggressive from a negotiation perspective. So just being aware of kind of all of those things as you're going out and having those conversations. So with that, I'll turn it back over to Nathan to talk a little bit about competition.
Great. And let's be honest, in that example, I would be the bad negotiator probably, which would end up with 0% of the interest, and the qualified intermediary would love me. Jill would be the one.
I can attest that. I was being very complimentary, Nathan.
Yeah, it's okay. It's okay.
I know, you're self-aware. It's great.
So when we talk about competition, so the idea to think here is if you're going to start, and we're going to focus on trying to bank qualified intermediaries versus you all creating a subsidiary to do be a qualified intermediary, which is a very possible thing that you can do. We actually have banks that do both. They have a 1031 division, but they also go out and look to bank qualified intermediaries. So you could do both. But as I'm talking about competition and competing against other banks to win this business, that's what we're going to focus on. So What we've heard after talking to these qualified intermediaries is specialization is critical. So if this is a piece of business that you're going after, it is important to have some dedicated resources. It doesn't mean that all they do is go after 1031s, but they do focus on 1031s. They take the time to understand the different types of exchanges, the capital gains, the different rules, all those types of things. And so having that specialty deposits team that can have that specialization is definitely something that helps out so much. In fact, I believe it was Dan, wasn't it, Jill, that he kind of created his own course that he gives to bankers after they sign up. He's like,
Yes.
yeah, he's like, it's you need to know. So could you imagine if Dan calls up the bank and you're like, oh no, and you know everything, right? That creates a sense of comfort and a sense of differentiation too. The next one is the right tools and training. So making sure that you do have all the tools to be able to set up to support these qualified escrow accounts, make it easy for everyone to access, et cetera. And then you are going to want to figure out what is that strategy that you're going to follow to attract these qualified intermediaries. That's how are you going to find them? How are you going to talk to them? What's the packages that you're going to be able to put together to bring them over? So just to dive a little bit deeper and share another just little vignette on someone in particular. So we talked to Adam. He works at Exchange Resources Inc. He is one of the people that does the exchanges, which part of it is doing the exchanges, and the other is also just looking for the business. A couple things that he shared. And this isn't true for all exchanges, right? We're just sharing different vignettes to give you various different pictures. They actually don't worry too much about splitting the interest with the exchanger unless the transaction is over $5 million. My guess is that as interest rates continue to rise and their exchangers start to, get a little bit more savvy of what type of interest rates might be able to be earned on these deposits, I think they'll probably get a little bit more pressure. But if you could imagine when Fed funds was basically 0 to 25 basis points, it wasn't until you got to those larger balances that it actually made a big difference. The other thing that he said that was super important to him is that they have good accounting for the interest per account, getting the breakdowns for the clients so that they could very easily see what it was. He has found that sometimes it is important that as he is looking to get the business of an exchanger, that he will actually share due diligence documents from the bank where the funds are going to be held. He obviously works with the banks to be able to get that information. The main sources of getting his exchangers is he works with closing attorneys, real estate agents, and does investment seminars is where they really focus on building out. One of the interesting things, it's not just Adam himself, but the business as a whole that he works for, is this one in particular is extremely rate sensitive. And so their strategies have been they switch banks every 18 months or so, feeling like that's what they need to do in order to make sure that they're getting the best rate. It's important to understand, maybe find out the history of their banking relationships, find out why they've made those different decisions. And obviously, we're always trying to build those long-term relationships, trying to set expectations of what is it that we can do that we can have a long-term relationship. So we're just not one of those banks that you just use for the next year and a half. The other thing that I would mention is not all banks are pursuing this business. I would actually say that it's definitely less than 50% of the banks out there. So a couple reasons for that. One, they might not need deposits. I think that's changed a little bit, but if you could imagine 2 years ago, 3 years ago, a lot of banks were flush with deposits, weren't looking to grow their deposits. And so these are very large, chunky deposits. As Jill mentioned, it could be as small as a single family home rental that's used as an investment property to, a headquarters of a large Fortune 500 company. So that's part of it. Some banks don't do it because they don't have the staff or the expertise to be able to handle it. So one, they might not even be aware of it in the first place, but then if a proposal or RFP or an opportunity comes, they'll kind of look at it and be like, oh, actually, we're not familiar with this, and I don't think we have the ability to actually fill these particular requirements. And then the last one, which is, part of this is, how much do you want the deposits? But also, you have to watch your own profitability. You need to understand and be very clear on what you can pay for interest. What are those fee expenses that you might have for wires or for the different cash management tools that they're going to need access to? And so at some point, you are going to have some qualified intermediaries that they're looking to push the envelope to be able to, to the benefit of their company, just from a dollars and cents perspective. And so sometimes you might say no to business based off of what's going on there. Just a quick story for one bank that we talked to that has an internal QI team. So they've actually started telling exchangers that, sorry, we can't help you. We have a month's long backlog. Right. And so that tells me a couple things. One, they actually don't want any more deposits, right? But they're using that, the fact that they have a backlog, there's just too much volume to be able to work through that capacity. So just understanding those different types of things, I think, is super important. So that's a little bit about kind of the competition and how you might think of a couple different banks and a specific vignette of someone that works at a qualified intermediary firm. I think the next question always becomes, okay, cool. Now, how do I actually find them and talk to them?
Well, I'm glad you asked, Nathan. Yeah, we have a couple slides about that, I think. So a couple of things that just, again, in our research, and then having the ability to work with banks who are servicing this space, as well as talking firsthand to some of those clients of the banks that are in the space. Really, there's a lot of places where you can look. Nathan mentioned it as well. Real estate closing attorneys often need the services of QIs and can definitely provide those referrals. And of course, we keep talking about the Federation of Exchange Accommodators, the FEA. That is the one and only national association that represents QIs. So just a plethora of knowledge there. They provide advocacy, they provide continuing education, and of course, they have a database of QIs that are available. So the next thing then would be to definitely search for QIs in your state. Nathan, if you want to just go to the next slide, please. And thank you. So definitely, search for QIs in your state. As Nathan kind of talked about before, maybe you have those geographical limits, maybe you don't, and you can expand your reach a little bit more. Start talking to your real estate attorneys, CPAs, any of your clients that are existing that do work with QIs. And then, of course, we're going to provide you with an ebook post this webinar, like-kind exchanges under Section 1031. It's an ebook. Highly recommend that you read that for content and just providing you with other ideas. Definitely join the FEA. As mentioned, learn the basics of the industry and your typical exchange process. Contact bankers that work in this space and ask for direction from friendly bankers that you know. Contact accommodators like we did. People are really want to talk about themselves. As you guys know, when you're out there prospecting any really small business, the key to that is really listening to what they have to say, because small business owners, they love to talk about themselves and they love to talk about their business. And you can really be a sponge in collecting and understanding what that space looks like. And then finally, I think a really important point that Nathan touched on before is make sure that your bank is committed to working with this space. It is definitely a niche vertical. It's a specialty vertical. And you're going to want to make sure that you have the products and services needed to really go after that space effectively. And then finally, there is, as you guys know, there's a 180-day window for these deposits. Meaning, the QI takes them in and they have to be deployed within 180 days. So it may seem like a short amount of time for any given deposit that you have, but the QIs really have a steadied supply of those recurring deposits. So when they go out, others moved in. We've talked a lot today about the volume of transactions, the volume of wire transfers. So that just gives an indication that this is a very steady business. So even though there's a short time window for each one individual, there's a pretty steady flow of average deposits that the QIs work with. So with that, I think we are turning it over. There we go. It's time for the Q&A portion before we get into the demo.
Thanks, guys. That was great. Do we have any questions from the audience of anything about QIs or 1031s or anything else that we can answer for you right now? If not, Jill, I think we can probably just jump straight into the demo. We went just a little bit over on content time, so I want to make sure. And of course, we can answer questions during the demo as well. So.
Yeah, absolutely. I would love to. Okay. So what you are looking at right now is our demo environment. Focus Federal is our made-up bank name where we're providing the opportunity to illustrate our platform and the capability of our platform to handle the 1031 exchange space. So we have this organization, Franks and Phillips, PLLC, is our pretend illustrative QI for the day. And just to kind of navigate quickly through the data and how everything is really laid out and organized. What you're looking at here is a unique, really, folder functionality. It's completely customized to the end user to be able to organize all of their exchange accounts however it is that they would like. So they can easily come in and create a new folder. I've got this folder for different clients from a geographical standpoint. So if you kind of go into that space, you can see there are a couple exchanges there. Go in here, we've got some Little Rock clients. And so they can customize this, add a folder, come in, organize it further should they need to, rename the folder, delete the folder. So again, very customizable to the end user, inclusive of dynamic search. So we work with QIs today on the platform that have over a couple of hundred exchanges that they're utilizing the system for. And of course, they're going to need to organize that and in a way that's very effective for them to create efficiencies within their business. We also have some QIs on the platform that just have a handful of exchanges on there today. And that's great. And we're so happy that the platform is valuable to them. And in those cases, they may choose not to use the organizational functionality. The point is that it's customized for the end user. Now, as we move over to the right, what you're seeing here is all of the transactions that are associated with each exchange. So you can see money moving in and you can see money moving out of each one of these exchanges. Now, as Nathan talked about with the one client that we talked to that had, over 5,000 transactions in a year, that's going to be pretty critical that they can really hone in and find what they're looking for. So while we keep all the transactions on the main landing page, at any point in time, we can search for a particular exchange that we're looking for, come in and take a look at that particular exchange. So we know we have one for Curtis here. The total balance is $66,300. You can see all of the detail about Curtis here, which again is editable for the end user. But more specifically, we've got the transactions that are just associated with this one exchange here. So you can come in and say, oh, on the 15th, we had 2 deposits that were made here, and then come in and find those transactions very easily. Now, from a document standpoint, I'm really proud of this part, so I'm excited to share this. Of course, when you're dealing with these types of accounts, the W-9 is going to be important from a collection perspective. For tax reporting purposes, we need to collect that W-9 in the account opening process. I'll walk you through that here in a second. But we house that document here because, of course, a portion of this interest could be reportable to Curtis here, and we want to make sure that we're reporting that effectively at the end of the year. So we do collect the W-9. However, within this portal, in addition to that, there is a document depository feature to this portal that the 1031 exchanges that are on our platform today are utilizing to house their exchange agreements. So what they're finding is that this is really a one-stop shop to be able to have everything that they need in one spot, inclusive of those exchange agreements that you can see here that we've just uploaded to the portal. So can house any document that they're looking for. Now, coming back over to the front, just to give you a couple more kind of lay of the land here. Statements are delivered on a monthly basis. So at the beginning of the month, we will drop the statement here that will provide a summary, a high-level summary statement of all of the accounts that are on the platform, as well as individual statements for each one of the exchanges. That's going to be within that file. Now, you may have noticed when I was in this record that there's a statement here as well. And so we're also going to deliver that individual beneficiary statement right to the platform. So if Curtis calls and says, hey, can I get a snapshot of what my exchange looked like? You can easily come in, download that, and send that off to Curtis to let him know what the details of his account are. As we move up, you're seeing here a total balance of $186,000, which is reflective of every dollar that is within the exchanges that are on the platform. So as you can see, really easy to use, very easy to maneuver, and easily find what you're looking for. Now, to open up a new exchange is that much easier. So obviously, from a digital perspective, you're going to want to have the ability to manage all of these right at your fingertips 24/7 from your office. And this platform provides that ability. So the QI can come in and open an exchange in pretty much less than 60 seconds. They can close it in less time than that. So very efficient and valuable accounting tools. So let's say there's a new account being opened. We're going to come over here, navigate to the left-hand toolbar, click on new sub-account. And we can go ahead again. The customizability of this just continues. So let's say we're going to continue on with Nathan here, who is a master negotiator, as we've all just discussed. We can call this whatever it is that we want, numbers, letters, whatever. Again, highly customizable. He is an individual from a beneficiary perspective. And we're going to say that he lives in the Boston market. We're going to go ahead and hit continue. And the only piece of documentation that we're going to need through this process, like I said, is that W-9. We have two ways to collect that. If you have it manually, you can certainly manually upload that to the platform. But in addition, there's DocuSign functionality built in. So if you don't have the W-9, no problem. We can DocuSign out that link to the exchanger. They can fill that out, sign it, and as soon as it gets back to the platform, this exchange will be active and open and ready to be funded. So coming back over here, let's just show you one more thing here, which I think is important, is let's say that Curtis here, we're at the 120-day mark, and we want to go ahead and close this account out and distribute those funds out to Curtis. We are simply going to come into Curtis's record here. We're going to hit on close sub-account. We're going to see this pop-up that comes up where we've got the account balance here, and then we've got the accrued interest that, of course, we need to pay out. And I think a very important feature here, especially for accommodators using the platform, is the ability to wire transfer those funds out. As we've talked about throughout this webinar, wire transfer capabilities are extremely important to the QIs. And so having the ability to close out via wire transfer, basically by checking this box, we will have the ability for that QI to put in all of their information of where those funds need to go. And once they hit transfer balance and accrued interest, we're going to send that notification out to the wire team at the bank so you can facilitate that wire transfer and follow the processes and procedures that you already have built into your bank. So again, very easy workflow, easy to maneuver. The other thing that I will point out before I stop and allow for questions is that as we were talking about Nathan's exchange here, we talked earlier about Nathan's ability to negotiate, and he's going to get 50% of the interest that we're paying out to Franks and Phillips. And so the cool part about this is that we do have the ability for Nathan to be able to provide Nathan with 1.5% interest while we deliver the other half of that interest to Franks and Phillips. And so Frank and Phillip will have their posted interest account here. will deliver 50% of the interest to them and 50% of the interest to Nathan's exchange. Each individual account here can have a different complex interest split depending on the negotiation of the exchanger with the QI. So the possibilities are endless when it comes to being able to handle those splits on the platform. In addition to turning that interest into fees, nothing is out of bounds here when it comes to the negotiations for the QIs with the exchanger.
Great. And I'll jump in. I saw that there was a question about timing in regards to transactions. And so for those of you that are work with us at ZSuite Technologies and use ZEscrow, this is kind of focused on a particular question about how the platform works. So Michael had the question, how are wire transfer handled with timing? Aren't monies moved from the holding account to the disbursement account next day? So there's a couple things that this depends on. If you do have a qualified intermediary that is using a master account setup or a disbursement account or like a zero balance account where the money's going to get wired in or out of, that's where the funds would be received. And then if they open up the sub account on ZEscrow, the money would move from the that master account into funding the sub account the next day or at the cutoff time that you have the daily transactions set up. We do have a couple banks that are set up in a real-time perspective where those internal transfers happen in real time, but the large majority of our banks up to this point are on a daily batch. If there's any time that money needs to move faster than that based off of your setup, whether it's that internal transfer or a wire, those can be executed with the current rails of the bank. And then basically what we would do afterwards is through the platform. The QI could do it, the bank could do it, either one. You would just say, oh, hey, look, that transaction that we did yesterday, I'm now seeing it on ZEscrow and I just need to assign it to the appropriate sub account. So there's a lot of options on how to make that work. And Michael, as we work with you and you have different use cases, we can go deeper into any of those particulars. And then Catherine, I saw that Simon asked a question, even though you answered on the chat, we'll touch on that briefly as well. What type of conferences might we be able to go to? The best thing that we can recommend for anybody, if you are looking for conferences, is start with the Federation of Exchange Accommodators. That is a national organization, but there's a lot of great information there, and it's a great way to get started. Other than that, we already talked about the ebook. As well as the ABA Real Property Trust and Estate Law Group on LinkedIn. The other piece from a resource perspective is we do have a battle card. And Catherine, I don't know if you wanted to talk about that at all.
Yeah, absolutely. So as soon as this webinar ends, you'll be receiving an email with the recording of the webinar. And next week, we will also follow up with an email that has this battle card on it. So this is kind of a cheat sheet for everything that we talked about today that you can download and use with your teams or use for yourself. And it has all of these resources on it as well. Cool. Well, I think that's all the information we have for today. If anybody has any additional questions, we're happy to answer them. I know we're just about the time we told you we would get you out of here. And so definitely want to be respectful of that. This has been a great webinar. Thank you, Jill. And thank you, Nathan, for your presentation today.
I knew you were thankful because the slide said so.
Well, right there, it says so.
It's right there.
You're so perceptive, Nathan.
I know.
It's negotiating and perception. Those are those are my two core skills.
Great. Well, thank you as well, Tara. We will follow up with those emails and look forward to just being a resource for y'all in the future in sales. Bye, everybody.